today we'll be learning a three-step process that I use for swing trading. Let's deep dive into it. We'll use this three-step process with price action, that is without using any kind of indicators. Before I start with that, I'm making following assumptions. The first assumption is you have basic knowledge of technical analysis. When I say basic knowledge, it means you know what are candlestick charts. You know how candlesticks are formed. So basically a candlestick is formed with four price points: open, high, low, and close. You are also aware what are the different time frames that are used for a candlestick chart. Examples can be 5 minutes, 15 minutes, hourly, daily, monthly, weekly, whatever. I'll also be frequently using these two terms that are listed on your screen: long and short. A long is a trade where you buy first and sell later. A short is a trade where you sell first and buy later. These are the assumptions. I am assuming that you are aware of these basic terms. Now let's deep dive into the three-step process that I use to initiate a trade. This three-step process we will be first looking at using price action. One thing I want to tell you, the price action thing that we are going to discuss now, you from this point onwards, you do not need to take any course on price action. You will see literally people selling courses on price action. This price action word is actually a abused word by many trainers. There is hardly anything to sell, like people sell lakhs of rupees courses just on price action. Not needed. We'll discuss what is price action. This is a three-step process. So in the first step, we will decide which stocks we want to shortlist, either to go long or either to go short. In the second step, we will decide at what price we should be taking a long trade or a short trade in a particular stock. And in the third step, we will be deciding the timing, exactly when we should go long or short in a particular stock. You can call these as three steps or three questions. Unless you have answers to all the three questions or all the three steps, you won't be initiating a single trade from now on. So in the first step, let's say you are a boy or girl about to get married. The first step that your parents would do is they would register you on some kind of a matrimonial website. The first step is registration, and then after registration, what you will be doing is you will be selecting or shortlisting the profiles that you are interested into. In the first step, we are just creating an interest. Okay, so the criteria can be anything. We'll talk about what's the criteria, what should be the criteria for selecting or creating interest in a stock. But when it comes to matrimony, criteria can be anything. Here in price action, the first step that we would be taking is using analysis of a trend. Some of you might be already aware of what are trends, how to do trend analysis and that kind of thing. So first step, please bear with me. Some of you might feel that you already know this stuff, but from second step onwards, I'm sure you'd be learning something new. Some might be learning new things even in step one. Step one, the analysis of trend we have to do on stocks, and we will be doing trend analysis on weekly charts. Okay, so let's look at what is actually a trend. When I say a trend means a price has to go either up or either down and either sideways. So अगर 100 रुपए का stock है, it has to go to 200. 100 to 200, we will call it as a up move, or let's say an uptrend. If a stock has to come from 200 to 100, let's say it's a down move or a downtrend. And let's say 100 का 100 ही रहेगा over the period of time, we will call it as a sideways trend. So we will be discussing three different type of trends. Trend, as I said, stock, if it has to move from 100 to 200, it won't go in a straight line. What will typically happen is stock will go up, then come down, and then again start its move up. So a trend will be a series of a up move and followed by a down move. Series of up moves will be called as trending waves, where price moves in desired direction. And then when it's a down move, let's call it as a corrective wave, wherein price will be moving in opposite direction. Trend, when I say trend, it is a series of trending move and a corrective move, or let's say series of trending wave and corrective wave. Okay, so we will analyze trend on weekly charts, as I said, for swing trading purpose. Now let's see how an uptrend will look like. So this is a ideal way to show an uptrend, wherein if stock has to move from 100 to 200, this is the way it will go. 100 to 200, it will not go in straight line. 100 से 120 जाएगा, नीचे 110 पे आएगा, again it will go to 140 maybe, whatever levels. This is the way it will go to 200. 100 से 200 सीधा single straight line. Okay, so here if you notice what's happening is, if you mark the points between a trending move, so let's call this as a trending move wherein prices are moving in our desired direction, and then let's call this as a correcting move where prices are moving in opposite direction, but still the trend is intact. Okay, if I consider a uptrend, it is a series of trending move and correcting move. Okay, so T will be followed by C will be followed by T. So T is trending move, C is correcting move. So if you see, if you mark the points between trending move and correcting move, you will get the tops. Okay, if you mark the points between correcting move and a next trending move, those points will be called as bottoms. Okay, now uptrend is classified as higher top, higher bottom. What it means is, the if you notice the tops are moving upwards. T2 is greater than T1, T3 is greater than T2. Similarly, if there is a T4, T4 will be greater than T3. Similarly, if you see the bottoms are also moving up. Okay, uptrend will be classified as a higher top and higher bottom. Why higher top? Because tops are moving higher. Higher bottom because bottoms are also moving higher. People also refer to it as higher high, higher low. So instead of top, people will call it as high. Instead of bottom, people will call it as low. So higher high, higher low, higher top, higher bottom, both are same. It necessarily means it's an uptrend. If you look how downtrend will look like, this is just theory. We will look on charts how we will be looking at trends. I'll first cover the theory part and then we'll look at the charts also. So in a downtrend, if price has to come from 200 to 100, maybe it won't come in a single line. What will happen is it will come down, again rise up to some level, and again resume its down move. So here also you have a trending move where prices are moving in desired direction, which is down, and here correcting move in a downtrend, the prices will move upside, which is against the desired direction. Again, it will be followed by a trending move, followed by a correcting move, followed by a trending move, correcting move, and trending move. So again, series of trending and corrective moves. Okay, here if you see the point between trending move and correcting will mark them as bottoms, and the points between correcting move and trending move will call them as tops. Now in a downtrend, you will see tops are moving down and also bottoms are moving down. Downtrend is classified as lower top, lower bottom. People will also maybe call it as lower high, lower low. Both the meanings are same. It means it's a downtrend. Sideways trend, you won't be able to clearly establish what is the trend. You won't see higher tops and higher bottoms or lower tops and lower bottoms. For any chart, if you are confused about what's the trend, you will call it as a sideways trending stock. So if you are confused about trend, it means it's a sideways stock. Okay, before we come to step one outcome, let's go and have a look at charts. You can send me, you can type in your suggestions in the question and answer window, wherein let's proceed. Sanjay ji is asking, stock selection is based on weekly or monthly trends. Is there a benchmark regarding volumes? So Sanjay ji, we'll be first going through, I mean, we'll be analyzing stocks for step one. That is, we are doing trend analysis on weekly charts only. We are not looking at monthly charts for swing trading purpose. For maybe positional or long-term investments, you might do that, but for swing trading, you do not need to analyze higher time frames than weekly charts. So step one, we will be analyzing trends on weekly charts only. And regarding your next question, is there any benchmark regarding volumes? I don't use volume analysis at all. As far as my trading style is concerned, or my perception about technical analysis is concerned, anything, I firmly believe that anything that is taught in technical analysis about volumes is just a theoretical nonsense. I do not consider volumes at all. So okay, so there is one more question from Gopinath ji. He's asking what is swing trading. So basically, Gopinath ji, there would be three different types of time horizons you will be looking at when you initiate a trade. That time horizon will tell you how long do you want to hold a particular stock. So if you are holding a particular stock just for a day or so, it will be a intraday trade. If you are holding a particular stock for more than a day, but maybe less than 10 days or 15 days or less than a month, it will be called as a swing trade. And if you want to continue holding it for years, it will be called as a positional trade, or let's call it as investment. And if the time horizon is short, let's call it as trading. I hope that clears your doubt. Okay, you can type in stocks that you want to analyze for trend. We do it on weekly time frame. So you can tell the stock that you want to analyze. For now, I have opened Nifty chart. In Nifty chart, if you can see, there is a trending move followed by a correcting move, again a trending move followed by a correcting move, trending move, correcting move. This will be a uptrending chart. So Nifty is in an uptrend on weekly. Similarly, if you see Bank Nifty, you will see similar thing. That's how you will analyze a trend. You will open the weekly chart. So I have opened weekly chart of Nifty, Bank Nifty, and then Pradeep ji is asking how do we find a particular stock for swing trading. We will be discussing that, Pradeep. Let's not jump to it right now. Sanjay ji is asking me to analyze Exide stock. So let's check what is the trend on Exide. So Exide looks to be in an uptrend. Then Rajesh Expo. Rajesh Expo looks to be in a downtrend. So if you see here, it's making lower lows and lower highs. So Rajesh Expo would be a downtrend for me. Tata Power. Tata Power is in an uptrend. Rain Industries Time Techno. So Rain Industries looks to be in a sideways trend wherein you are not getting a higher top or higher bottom formation. Time Techno. Time Techno is in uptrend, clear uptrend. Subhaji is asking how to confirm about trend or structural reversal. So Subhaji, we won't be discussing about reversals. We are essentially discussing today about swing trading. So when we are doing swing trading, our first assumption is the trend will continue. We won't be looking at reversals. We want the trend to continue to do swing trading. We won't be doing reversal trades, and you should not be doing reversal trades also. Let the trend establish and then take swing trades. HCL Technologies. So HCL Technologies is showing a uptrend. Again, Gopinath ji is asking how volume is important for swing trading. As I said, anything that has been taught to you about volumes, it's just a theoretical nonsense. Don't use volumes at all. I don't use volumes analysis in my trading. So you can safely ignore volume. Prince Pipes. Prince Pipe also looks to be going sideways. That's all. I think I have covered most of the stocks that you guys have suggested. Analysis of trend is clear. We'll see about the next thing that we want to do. Okay. For us, after we do trend analysis, then it comes outcome of first step. What is the outcome of first step? So first step, we will be analyzing trend to create interest in a particular stock. If I go back to the example of a boy or girl getting married, in the first step, once you register on matrimonial portal, first step में खाली मन बनाना है. You just need to create a interest in a particular boy or girl, depending on who you are. Create interest or maybe express interest in 10 different maybe boys or girls, depending on whom you are. The first step is just expression of interest. Here अभी तारीख तय नहीं करना है यहाँ पे. It's just expression of interest. Once you express interest, interest will come from that side, and then next steps will proceed. In the first step, we are just creating interest in a particular stock. The outcome of first step, ऐसे I am interested to go long in a particular stock if it is in an uptrend. ठीक है. I want to go long in those stocks only which are in uptrend. I am interested to go short in a particular stock if it is in a downtrend. Okay, so shorting is done on only stocks that are in downtrend. Now there are different ways to short. I am just briefly mentioning few of those things. I won't be discussing how to go long or how to go short in this particular webinar. It will be just arriving at a decision whether we want to go long or whether we want to go short. There are different ways how you want to go long or how you want to go short. Shorting can be done in following ways: short equity or ETF on intraday basis. Second way to short is with you will sell future of a F&O stock. Third way can be you will buy a put option. and fourth way, you would be deploying some kind of strategy which combines futures, options, and or equity. There are different ways to go long, different ways to go short. We will not be discussing those in detail today. We will be just arriving at a conclusion whether we want to go long or whether we want to go short in a particular stock. Now, if step one is clear, let's go to step two. In step two, what we will be doing is we will be identifying support levels and resistance levels. These support levels and resistance levels will determine or will decide at what price I want to go long or short in a particular stock. Okay. So let's discuss or let's see what support and resistance levels mean. If you see here, support is any level from where you see a buying interest, and because of that buying interest, the prices tend to bounce upwards. The number of buyers start coming in, they want to buy more, they will buy at any price they want. So it will create a buying interest which will push the prices upwards. Any level, any price level at which there is a buying interest, you will see prices moving upwards. Similarly, any price level where you see interest, selling interest, it will get the prices down. Number of sellers, if they are more in the market, they will bring prices down. A support is a price level from where you will see price bouncing upwards. Similarly, resistance will be a price level where you will see price moving downwards. So if you consider you have a ball in your hand and you throw it down, the ball will move down, hit the floor, and then it will bounce up. So floor is a support for that falling ball. Similarly, if you throw the ball in your hand upwards, it will go hit the ceiling and then come back down. So ceiling is a resistance for the ball that is moving upwards. Okay. We will be essentially analyzing what would be a support price or what would be a resistance price looking at a chart. Now to do that, here is the list of probable support areas and resistance. If you identify any of these on a chart, it will probably act as support or resistance on that particular chart. Okay. Here for today's discussion, we will limit it to first four, or let's say first 5 points only. So first is previous swing high, previous swing low. So what it means is, as we saw, uptrend is something like this. You have a trending move, you have a correcting move, and again followed by trending. Most of the times what will happen is you will see two lows at the same level. So even if two lows are appearing at the same level, we will treat it as a higher low only. Okay. And then you will see an up move. Usually this type of correction, wherein correction happens in a single move, it is called as simple corrections. And these kind of moves where correction is happening in waves, this is called as complex correction. Okay. Mostly on charts, you will be looking at complex corrections. So practically you won't be able to see such a clean chart. It will mostly be something like this. So this portion will be called as a complex correction. It won't, this particular portion will be called as a simple correction. Okay. Here the previous swing low that we are looking at. So this previous swing low acts as support, or previous swing high acts as resistance. Okay. Previous swing low, previous swing high are probable areas where price will take support or price will take resistance. I am stressing on the word probable because just because there is a previous swing high, it doesn't mean price will take resistance. There is a probability that price may take resistance. Okay. It's a probable area. It's not a confirmed thing, or it's not a certain thing that resistance or support may come there. Second particular area is where role reversal takes place. Now what do I mean by role reversal is, let's take this example. Now here if I mark this top level, this level was acting as resistance. Okay, so this previous swing high acted as resistance, and when you reached the previous swing high, prices fell down. Now, if prices move upwards from here, now this point onwards, the same resistance level until this point, this was a resistance level. Now this level starts acting as support from now on. Once breakout happens from the resistance level, that level will act as support. So this is called as role reversal. जो पहले resistance था, अभी वो support बन गया. Okay. So that is called role reversal. Role reversal will happen when resistance gets broken it will act as support. If support gets broken, it will act as resistance. Okay. Example is previous swing high, if broken, becomes support going forward. That I have drawn on chart. From this point onwards, resistance got broken on the upside. Now, if the prices have to come down, they may take support at the role reversal area. We will look all the support and resistance probable areas on charts. For now, let's continue with the next thing, and then we will together look at it on the charts. Now the next is gaps. Now when I say gaps, here we will be looking at ordinary gaps. When I say ordinary gap, let's say there is one candle. Now even though I am drawing it as red, let's consider this as a positive candle wherein open is here, close is here. So close is above open, this is high and this is low. Okay. So this is the previous day candle, or let's say yesterday's candle. Now today, when market opens, if I get open somewhere here and today's candle is like something like this is open, this is close, maybe high, maybe low, you will see there is a gap between previous candle and today's candle. Okay, this is just plain air on chart. There is no price or no trade has been involved. Let's say this high was 97 rupees and let's say this open was around 102 and low was around, let's say, 100. Between this 97 and 100, there is just plain air. No trade has happened between these two levels. So that particular area where no trade has taken place, we will call it as a gap area. In this case, it is called as gap open. These gaps will tend to act as support or resistance. Now, if the price happens to go up and then come down, there is probability that it will take support somewhere near the area of gap. Similarly, if today's candle happens to be something like this, let's say this is a negative candle wherein open is here, close is here. Now you will see the previous candle low happens to be here and today's candle high happens to be here. Now this particular gap will be called as gap down. Now if prices have to go down and then again bounce back, there is a high chance that this gap down will act as a resistance. Okay, gaps will be acting as probable support and resistance areas. Now let's move to the fourth point. So fourth point is about round numbers. Important thing about round numbers is it aligns with natural human tendency. If you, let's say, if you have bought a particular stock at maybe 89.90, you may be tempted to sell it if the price goes to 100. Like if at all you want to set a target to a particular trade that you have taken, you will most probably set it to a round number level. Okay, so that's the prime mistake that traders do, is setting stop loss and targets at round numbers. You should never ever from now on set either target or stop loss at round numbers. If you set it at round numbers, there is a high chance that your stop loss will be triggered and then price reverses back, because round numbers will be show, I mean, when price is near round numbers, it may have a buying interest or selling interest. Let's say a stock you have missed, which you are tracking, let's say it moved from 98 to 106. Your probable buying interest would be, you'd say to yourself, if it comes to 100, I'll buy. For people who have entered at 106 and who maybe set their stop losses at 100, their stop losses may get triggered and then stock starts moving up because there is buying interest at 100. Okay, there are other buyers who want that stock to buy at 100 levels. Any round number will probably act as support or resistance. Don't ever set your stop losses or target orders at round numbers. If you are setting target, just set it below round number level. If you are setting a stop loss, again set it below round number levels when you are going long. Next is congestion area. So I mean by congestion area is, we had a look at trend. So I said trend is a series of trending move and correcting moves. Okay, it is series of T and C. As I said, this C is a simple correction. It may not happen always. So sometimes what will happen is you will get a trending move, and instead of correcting move, you will get a consolidating move. When I say consolidation, it means prices will tend to move in a tight range and then either they will break on the either side. it will maybe break on the upside or it may break on the downside. This particular area where prices are moving in tight range, we'll call it as a consolidation area. Uptrend will even look like this. It goes upside. You had this trending move, and then instead of correcting move, you had a consolidating move, and once it breaks from consolidation, you again have the next trending move. So even this is possible. Wherever prices are consolidating in a tight range, we will call it as a congestion area. Okay. That's about the 5 things that I wanted to discuss when it comes to marking areas of support and resistance. Now, you won't be looking at every area on, like, every probable area on chart. Maybe out of these 8, you can select 1 or 2 that you would be following. Don't try to mark all 8 on charts. Now, what will happen? यहाँ पे भी support है, यहाँ पे भी support है, यहाँ पे भी support है, यहाँ पे भी support है. So don't mark all the probable area. Just select 1 or 2 that you want to decide for your analysis. I usually use the first, second, and the fifth one. For me, for my analysis that I do for price action, I use previous swing high low, and then I use roll reversals, and then I use congestion areas. Just 3 I mark as probable support areas or probable resistance areas. Okay, don't go on marking all 8 of them on your charts. Your chart will start looking clumsy and you won't be able to, clearly analyze anything. Just select any 2 or 3 and then use it for your analysis. The other probable areas of support and resistance would be maybe moving averages, Fibonacci retracements, or if you are if it's a F&O stock, then even open interest may act as support or resistance. Let's not discuss 6, 7, and 8. That would be out of scope for today's webinar. But between the first 5, you can select any 2 or maybe 3 for your analysis. Now, why marking or identifying support and resistance area is important? Because support and resistance area, let's call it as SR area. So this support resistance area is the area of interest for me. If price moves in area of interest, agar price area of interest mein, then I get alert. Okay, why I get alert? It means time for an opportunity is near. Okay, so let's say you are a soldier who is guarding our national border. When you see a movement in enemy territory, that is the time when the soldier will get alert. It means an opportunity to fire a bullet is somewhere near. Okay, after identifying support and resistance, we have just identified or we have just got alert that timing may be near of an entry. Still we are not sure about the third step, or still we are not discussed the third, we have not discovered the answer to third question. Okay, so timing is just near. Here we are just getting alert. Okay, I'll discuss the third step and then together we will look it at on the charts. Outcome of step 2. In step 2, we would be identifying support and resistance to get alert for an opportunity. Okay. Step 1 may we had formed a sentence. Now we would be extending that sentence. In step 1, we said I am interested to go long in a particular stock if it is in an uptrend. Now we are extending it by adding and trading at a price within area of support. So I want a stock to be in an uptrend and then price should come back to area of support. Okay. Step 2 outcome, we have extended our sentence. Similarly, I am interested to go short in a particular stock if it is in a downtrend. So this was our step 1 ka outcome. Now we are extending this sentence by adding an and condition and trading at a price within area of resistance. Okay. Whenever price reaches SR area, that is support resistance area, we will get alert. It means time for initiating a trade might be near. We are not yet sure about the timing. Now, in the third step, we will discuss about the timing, when exactly I should be initiating a trade. Okay. For deciding the timing, we want something to happen which will confirm whether support, जिसको हम support by price ने पे support, whether price has really taken support or not. Something should confirm. We will be looking for confirmatory signs on the chart in step 3. How we will say or how we will confirm that support has been taken or resistance has been taken, we'll be discussing it now. Now we'll be looking at price action, or maybe we'll call this as candlestick patterns. Okay. Now we'll be looking at these candlestick patterns in the areas of support and resistance. Okay. Now let's say you have a trend in place. So this is a trending move, and then you have a correcting move, then again a trending move, and now you have a correcting move. Okay. So now here, if you see, previous swing low is somewhere here. So let's mark this as previous swing low. So this becomes my probable area of support. Okay. So this is my previous swing low. Now I have a trending move, correcting move. Now let's say first we'll look at the first candlestick pattern, which is called bullish piercing. Here the first candle is a red candle. Treat the black candle as a red candle or a negative candle, wherein the correcting move is intact. The first candle is moving in the same direction of correcting wave, and then you have the next candle which is going against this corrective wave, and the force of going against is such that the median of previous candle, it gets broken. Okay. Now if you see this kind of pattern formation in the area of support, then you will say that support has been confirmed. Now what you expect here is, you expect a next trending move to start from this point. What you will do is, if you see this kind of pattern, candlestick pattern, in the area near the area of support, you will mark the high of pattern confirmation. You will go long above this. So if price moves above this high, you will initiate a long trade, and you will keep a stop loss below previous swing low. Okay. So this is how you will be trading using price action. First is, you will be identifying the trend. It's an uptrend. Yes. Then you see a correction. You see prices approaching near the previous swing low, or let's say prices approaching the support area. Here you get alert. Now when this candle is formed, it confirms that support has been taken, and then you initiate a trade. So this is where you will be initiating a trade. This is the time to pull the trigger or fire the bullet. Okay. The last example that I gave you about soldier, that soldier just spotted the movement in enemy territory. Okay. But enemy is still in his territory. So the moment he enters your territory, that is the time you fire the bullet. You don't fire bullet just because you saw an opportunity. It's still in his enemy territory. The threat was not realized. The threat was realized when the enemy enters into your territory. Okay. Once you get a confirmation of support, you will be taking a trade. You won't be taking a trade just because prices have come to the area of support. You need some kind of confirmation. We will be looking at these patterns that you are seeing on the top side of the slide. First is bullish piercing. I told you, you have a negative candle, and then the next positive candle crosses the median. Median is the midpoint of high and low of previous candle. Median agar closing with positive candle, you will say confirmation, support confirmation has happened with bullish piercing pattern. Similarly, bullish engulfing, ये correction चालू है. The first candle is the negative candle which is moving the prices down to the near support area, and the second candle, positive candle, that's happening, it is eating out the body of the first candle. The body eat out होना चाहिए. ठीक है. Entire body of first candle is covered by the next candle. So that is called as bullish engulf. Now third is again, your prices are correcting, and then you get a hammer. Now hammer is a candle where body of candle has to be at the top of the candle. It should have a very small upper wick. The upper wick, if at all it is there, it should be smaller than the size of body, and the lower wick, it should be at least twice the size of body. Okay. So if such a pattern, such a candle appears near the area of support, I'll say support has been probably confirmed. Here also I'll mark high, and if price moves above this high, I'll go long. I'll keep a stop loss below previous swing low or below low of hammer. Here I am expecting new trending move to start. Okay. Now next pattern is morning star. Morning star is again, you can consider it as bullish piercing only. Only thing is, between these bullish piercing candles, there would be a neutral candle. So there will be either one neutral candle, or there can be many neutral candles, 1, 2, or maybe 3. So this can be 4 or 3. any number of neutral candles. I want them to be between the bullish piercing pattern or bullish engulf pattern. ये दोनों में, ये दो candles में, if you have neutral candles in between, I'll call it as morning star. Okay. And then there is one more type of pattern which I call it as pivot low. Now here you won't be looking at candle at all. You will be just looking at their high and low. So you won't be looking if candle is green or red. You just are looking at the high and low of candles. Okay. Now within, if prices are moving within the area, near the area of support, and if such a pivot low happens wherein first candle's low, and then you have second candle's low which is lower than first candle's low, and then third candle's low is higher than second candle's low, so you get a U kind of shape if you mark three lows. If such a pattern appears at the area of support, you will still say support has been confirmed. Here also I'll mark the high, I'll go long above this, and I'll keep stop loss below the low. Okay, any of these patterns, 1 2 3 4 and 5, any of these patterns, candlestick pattern happens in the area of support, I am interested to go long. That means it is time to pull the trigger. Now you will see these candlestick patterns appearing on daily basis, on continuation basis. कहीं पे भी दिखेंगे. You will not give any weightage to this candlestick pattern if it is not happening in the area of support or resistance. अगर सपोर्ट रेजिस्टेंस एरिया में ही ये पैटर्न्स बन रहे हैं, then only I am giving them weightage. Else I do not give them any weightage. They may happen anywhere on the chart. You will not be looking at those patterns. Gopinath ji is asking what action is required in the morning star. What does it indicate? Bullish. So yeah, so the patterns that are listed on the upside of the screen, they are bullish candlestick patterns. I want bullish candlestick patterns to appear in the area of support. I want bullish candlestick patterns to appear in the area of support. Okay. Now if you have understood this, the bearish candlestick patterns are exact replica images or exactly mirror images. Okay, you will be looking at these patterns, bearish candlestick patterns, in area of resistance. A stock has to be in downtrend, price has to go in area of resistance, and in the area of resistance one of these bearish candlestick patterns should occur for you to go short. So you will mark the low of these patterns and you will be going short. Here this should happen in the area of resistance. Now my stop loss when I am going short will be above the area of resistance, somewhat above the area of resistance. Okay, so that is how you will be taking trades based on price action. Yeah, now we will be looking at these things on chart. Okay, now if you see Nifty chart here, you will see prices congesting here. If I just carry this congestion area, ये congestion area में price moved down and then it made some candlestick pattern. Okay, so this is a bearish engulf which has happened here, and then stock moves up. Similarly, this was also a role reversal area. This was previous swing high that was broken. So until this point, it was acting as resistance. This point onwards, it started acting as support. Now again, if you see here, bullish piercing has happened and then stock started going up. Stock or index started going up. So this is how you will be first analyzing trend, then identify support and resistance based on role reversal, previous swing low, previous swing high, whatever you choose any two of them. Don't choose all of them. Just mark one or two levels that we discussed among fives. And once you mark that support or resistance area, whenever price moves near to it and a candlestick pattern occurs, that is the time when you should be initiating a trade. Here on Nifty chart, I would be initiating a trade. So if I mark this as a role reversal area, so I'll mark high of this candle, and when price move above this candle, I'll be going long here, keeping a stop loss here. Okay, this is how you'll be taking trades based on price action. First identify trend, mark support and resistance levels, and once you see a favorable action, that is favorable candlestick pattern occurring in the area of support and resistance, you will be initiating a trade. Let's look at some more examples. If you see here, you have a trend in place, then this was previous swing low, and previous swing low near previous swing low, you got this type of candle, which we saw hammer. Once you get a hammer, you just mark the high of that. Above this particular level, you will be going long. You will be placing stop loss below this level. Okay. So let's look Bajaj Auto. Again, you will see prices congesting here. Price with this candle, you will see price has moved in the area of congestion and hammer has been formed here. So this particular candle is a hammer candle. I'll just mark high and you need to go long above this. You will be placing a stop loss below this level. So this is how you will be initiating trades. Now for swing trading, I usually use a risk reward of 1:2. For Bajaj Auto, your risk is 9,500 to 8,600. So 900 rupees ka risk. I'll be waiting for a reward of at least 1,800 rupees. You will always follow 1:2 risk reward for swing trading. Step 3 outcome in price action we are looking for bullish candlestick patterns in area of support, or we are looking for bearish candlestick patterns in area of resistances. Okay. Step 1 and step 2, we had designed a sentence for us. That sentence we are extending and then again making it full and final. Full and final statement from the 3 steps would be: go long in a particular stock if it is in an uptrend and trading at a price within area of support, and bullish candlestick pattern occurs within area of support. Now if all these 3 things happen, you go long. Similarly, go short in a particular stock if it is in downtrend and trading at a price within area of resistance, and bearish candlestick pattern occurs within area of resistance. Again, if you have all the 3 things happening, you go short. This is how we have created statement. Now here, using this statement, we can conclude if we want to go long, or we can conclude if we want to go short. As I said, again, there are different ways to go long, different ways to go short. Discussing all the ways to go long or ways to go short would be out of the scope of this webinar. But briefly, if you want to go long, you can either buy equity, you can buy future, you can buy a call option, or maybe create a strategy where you combine futures and options with equity or without equity. I mean, the strategy, whatever strategy you choose. So we won't be discussing strategies to go long or strategies to go short. We are just arriving at a conclusion whether we want to go long or whether we want to go short. As I said, Sunilji is asking, candlestick patterns are considered near EMAs also. So if you are treating EMA as probable area of support and probable area of resistance, yes, you can consider candlestick pattern for confirmation of support at a particular EMA or resistance at a particular EMA. Sunilji is again saying, I understand that near swing high, low and important resistance and support we consider, but what near EMAs? As I told you, near EMA, if you are treating EMA as probable area of support and probable area of resistance, then these candlestick patterns, if they appear near EMA, then that is your confirmation. That is all I wanted to discuss about the 3-step process in price action trading. What I would suggest you to do is, first start with step 1, start creating your shortlist of uptrending stocks, start creating your shortlist of downtrending stocks, and within those uptrending or downtrending stocks, you look for supports and then look for support confirmation or resistance confirmation, and then maybe take a trade.